talking about tonight is just a way of organizing information. Okay, there's 100 ways to organize information. What we want to do is explain a way that we're currently organizing information, and it's kind of a domino effect. It kind of gives birth to some measure of perspective for the day, perspective for the given session, gives birth to targets, both local targets and then like your stretch targets or your runner targets. Um, and it's, I would say, systematic from the standpoint of uh, application. Like, it's not original, but I've also not seen anyone else kind of pull the pieces from the places that we have together to create kind of this picture of day in and day out market activity. So on that note, I'm gonna run through a list of people that we have, snuck little ideas out of. So these are Twitter handles. I'll post them here, and I might have forgotten a couple Twitter handles, but I'll post them here in the chat. I'm gonna run through these. So Trader Day is a person that talked, the first person and kind of one of the only people I've heard talk about organizing the time in the way that we're looking at. Justin Werlin is just a guy who's a trader who has some interesting setups and perspectives. Peter Resnicek, everybody probably knows of him. Volume profile guy. ITC, there's some concepts flirting in this mode of work that we would be remiss if we didn't at least give some portion of credit to. And then Flary, who's here with us tonight, we appreciate him, but his contributions over the years to myself and Banks and all of us just kind of coming up together. Purdue, who's also probably here if it's not past his bedtime, with some of his volume profile work that's worked its way into this. And then special thanks to Kyle and to Robert for helping with my inability in stats collection. So they've been kind to help us out. Purdue says he took a nap. They've been kind enough to help us out with that, and that part of this process is still being developed. But we have some nuggets that we wanted to go ahead and share from that. So that's our credit and our thank yous. Also, like anything, do your own homework, play with this. There's no magic bullet. Nothing works all the time, and you know you have to assume your own risk with anything that you're applying or learning. I would also say that if this is inspiring to you and you're interested in like continuing to develop and work on this concept, shoot us a message. Let us know what you think. If you think, if you come up with something different or some different approaches, we're always trying to learn. So I don't think we've hit a finish line per se. So yeah, that's the intro. Um, I'm going to turn it over to Banks. I'm going to flip on my screen, which you'll just be able to see a chart. Unfortunately, nothing magical yet, but we'll get to some stuff off the chart. But Banks is going to talk through some stuff, and I'll throw up some images as he needs them. So, Banks, the floor
Yeah,
is
so
yours.
yeah, so I'll kind of jump in, and this kind of all developed back in the U-Trade days, when we were kind of looking at the market in certain time frames, in the sense of why the market moves when it moves in certain time frames. So, and I know that we talked to Flurry about that, and it was actually about those kill zones. I don't know if you remember that, Flurry, or not, but it was back in those times, and then eventually going into the lunchtime liquidity runs, and just trying to figure out a way on how to quantify that and how to build at least a structure off of those positionings. So in essence, going into and I'll second this about the ICT. I completely get it, but there is some little nuggets in there with where this was taken from. So actually, the Trader Day developed a way of looking at the market, in essence, in the sense of quarters, and it's just a quarterly theory. There's nothing magic about it per se, in the sense that it just outlies a way that structure is set up. Um, but in essence, like that quarterly theory is fractal, in nature. Time is fractal in the way that we trade it. So, in essence, just a general overview of the quarterly theory is it basically looks at the more of the algo trading and how the market makers, institutions will actually move the market. I would say most of the time that the market's moving, it's not retail. If anything, it's retail, getting screwed out of their positions or something along those lines. But in essence, it gives a specific time frame for at least in my opinion, a more better probability in that time frame. And just the general overview of it, when you look at the quarterly theory in the sense of structure, there's four quarters in that theory. Now, when you dig down deeper into it, it can break it down over a year, a month, a week, a day, into those smallest time frames. But in essence, all of those time frames deal in the same model per se. There was there's always going to be an accumulation phase, which then outlines the manipulation and the distribution phase. And I don't know, Bob, if you want to bring up one of those
Yeah, I got you.
those models that we. Yeah. So in essence, this is a day type where the Asia range is in the accumulation, and then we look for the trade either in the manipulation or the distribution phase. And uh, I would say basically what this, in turn to me, look for a strategy wise is the probability of manipulation taking liquidity both on the highs and the lows is very high. And those are stats that we're running. Actually, we were talking to Robert about that today on the way Friday sets up going into Monday and how that basically I would say plays throughout the week. But in this model right here, the accumulation is just that chop in the market. That's the positioning on market makers getting into those positions. The manipulation would be the stop run on both sides of those moves. And then obviously the distribution is the move, uh, basically after that positioning. And I'll let Baba. You want to chime in any of
Yeah,
that?
yeah, yeah. So, like, if you've read like Reminiscence of a Stock Operator or looked at like Wyckoff
Yeah.
stuff, you're familiar with the pattern of like mark up, mark down, all of that kind of stuff, right? Livermore talks in the book as in the early 1900s about the idea of presenting one thing on the tape and then having a different intention, right? And we've all experienced the market cloaking those kind of things. The challenging thing is how do you organize the data in such a way that you're able to quantify when you would anticipate that type of activity. So when Banks is talking about the quarters theory, you can look at it in a really broad sense, literally like the quarters of a year. You can look at it as the quarters of a month. You can look at it as the quarters of a day, and that's where the alignment with certain sessions is a little atypical. So when we say the Asia session, we're referencing the price action from 16 or wherever you are from the open of ETH to midnight. That 6 hour chunk is all Asia session. But and then the Euro session starts at midnight and we go midnight to 6 a.m. And then 6 a.m. starts the New York AM session, and we view all of that price action from 6 a.m. to 12 as one section, one quarter. And then from 12 o'clock to the close of the day is the final quarter, and it's also a little bit shorter, obviously. And so you're looking at a specific time frame to organize the data, which is all the chart is, and then inside of that organized structure, we're modeling trade opportunities both in price, so where we might be, and in time when this trade is or isn't presenting itself. Now, you can take those 6 hour sessions and divide them into quarters as well, which is where I spend most of my time. And then you can then like dig into, okay, if we anticipate or if we see an accumulation type behavior in the Asia session, um, we can objectively define that. We can say if we don't make a close below or above the afternoon session, um, on pick a time frame. You can quantify that. You could look at just a 6 hour candle and ask yourself, does that look like an accumulation candle, or does that have the characteristics of a candle that's reversing the trend or continuing the trend? And then from there, you're able to kind of define the characteristics that you need to see in a different phase, like in a different quarter. So if quarter one accumulates, what would you be looking for in quarter two? Most likely, that would be the prime place and time for a manipulative trade. What are the characteristics of manipulation? Um, and also, if you're like, oh, I've got a question, throw it in chat. Or if we're like moving too fast or not fast enough, then say something. But basically, we're saying that we're taking the data, organizing it in 6 hour chunks. Inside of those 6 hour chunks, there are four 90-minute periods or 4 hour and a half chunks that matter a lot. And that is the like internal building of this. It's the fractal nature, right? We're building four quarters to create and complete one whole quarter. Inside of that is how you begin to create scenarios that you need to see. So, most of you guys are familiar with like the work that Flary's done with higher time frame delta. And so, if you're looking for, let's say you have a week where you have it's a setup that's like sell the 1A. I remember that from back in the day, right? Then early week you're looking, most likely, depending on where we open, you're looking for a move up to fail to have the opportunity to sell with targets below. And even if you don't really understand how the delta higher time frame delta works, you the advantage of having structure and a plan, and then the repeatability of that, and in even that trade setup also has the aspect of time. Because, if correct me if I'm wrong, Flary, but you're not looking for that 1A to trade like on Thursday or Friday. It's an early week sell to a midweek resolve is kind of the idea. um, I'm pretty confident of that. And so,
Correct.
yeah, and so in the same way, um, you take a way of organizing data, you add structure to it, and then you incorporate the element of time. And we're just saying that there's another way of doing that. So 6 hour chunks from, again, starting in Asia, that's going to be when you are evaluating Asia as it relates to the afternoon close. So the start of this sequence that you may be looking for would be Asia. How Asia trades, or if you're on a Monday, how Monday trades, is indicative to what we would anticipate Tuesday, Wednesday, Thursday, in the same way that Asia sessions trading can be indicative of what we would expect for Euro session, um, AM New York, and then PM New York. And
And I actually put those times in the chart, or
yeah,
I'm sorry, in the chat as well,
yeah.
so you guys have them.
So before we go to like the next section, right? Because the next section will talk about the organizational values and actually clarifying targets, goals, structure, um, all, and a couple of other iterations of how to apply it. But just the general structure of, we take a day, we chop it into four big chunks of 6 hours. We take those 6 hours and chunk them up into hour and a half sections, and that's the fractal nature of how one quarter of the day builds.
So inside of those time frames, like if you use the example of like New York PM, like the 11 to 12:30, if you break that time up into four quarters, it just breaks it down smaller, basically. but it's basically a 22.5 minute candle.
The idea is that there are some dependable things from a bigger picture sense and from an intraday sense. And that's what we think gives birth to why some of these, why this time frame idea really carries some weight to it. So generally speaking, we're looking for two different patterns. Day talks about this. I think there are more patterns that I've noticed. Quantifying those is where the work is that we're still not all the way finished with, to be honest. But let's look at this picture right here that I want to pop up. So this is a this is a reversal. So this is the pattern, one of the patterns that we look for. Okay. Um, One of the patterns that we look for is um, is a reversal, which you can't see the prior price action, but we're reversing. We're going down when we were going up. Okay, so this is the Asia range right here. Okay, you could also say if this was a day, like right, if this was a Monday that went down, whenever we see a reversal, then the next thing we would expect at the next quarter to spend its time accumulating. Accumulation most of the time looks like staying within roughly the bounds of the prior session's range. So we see a strong directional move, that would be that would be a reversal. Then we see this accumulation phase. Now this accumulation phase was directional, but did not take really swing highs, swing lows, or close above or below. Okay. Once we see the accumulation phase, again, at a certain time, we begin to look for manipulative activity. That would be in the AM of the New York session. What would manipulation look like? It would look like trading out the highs first or the lows, but in this case, we traded out the highs first. This clues us in that we want to be on the short side of the market attempting to take the lows of Asia. All of that derived from the activity that's seen here. Not really looking at magical structure or anything specific, just the pattern of reversal in this time frame led to accumulation in this time frame, led to the opportunity for a manipulative move. We would look for a trade through the highs, back through the lows, and then manipulation comes in two ways. Oftentimes, when we trade through the highs first, we want to target the lows, and then we want the opportunity to find a bid and trade back through the prior range once again, at least to the midpoint. Okay, and that would be our first like our first hop off the wagon. So again, manipulation phase trades out the highs first. That makes us look for a short trade once we peak the highs back at least through the midline, ideally through the lows of Asia. And then we want to reevaluate, but most likely we want to try to find a bid to trade back to the midpoint and then possibly out the high of Asia, which would complete my favorite form of manipulation, which is it's like a three-legged trade. It's a two-way manipulation. We manipulate out the highs first, out the lows, and then we go back out the top. And then you run into the afternoon, which is distribution. So it goes reversal, accumulation, manipulation, distribution. What does distribution look like? Distribution is the tricky one. It's very, I would say it's really important to know when you're in distribution because I think that's the one that can, most of the time we're looking to sweep out the rest of liquidity during distribution. In this day, the way that we chose to navigate that in sweeping out liquidity was to just blow people off both sides. Sometimes in distribution, oftentimes I look for a lot of equal lows. Like how on like a 1 minute chart we'll just go up, 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 up. That's a lot of times how the manipulation phase finishes, and then you can get that like a liquidity break to the downside. So the distribution back through some portion of that leg. Okay, so again, that's one pattern that we see often. Okay, is that is
Yeah.
that is that
Well, and
layout right there. Reverse. accumulate, manipulate, and distribute. Let's look at another example. Okay, so accumulation, manipulation, distribution, and then continuation. So
That should be continuing.
this
Yeah.
is that pattern again, right? This is accumulate. I think what I actually no, yeah, we're right. So accumulation here just looks like a slow drift, staying inside the bounds. Accumulation here is almost flatline during Asia, right? When we see the manipulation phase here, we trade out the top first, which triggers us to, if we're awake in trading, to look for the short to trade back through the lows. And what's interesting is I think we like one tick the lows, and then we want to be on guard for the opportunity during the distribution phase to possibly um, run liquidity, right? And so that would come in the form of like these very tidy little highs where we walk price all the way down to get that manipulative move, and then we're looking to trade back to the midpoint of this, back to the highs through with distribution. You can get very directional if you have a muted. So this would be something to make a note of in the chat banks for people. If you have a muted manipulative period, distribution is more expansive, especially if the manipulation period doesn't take both sides. That's when distribution is the strongest. So what do I mean? What do I mean by that? Quite simply, what I mean is if you have a manipulative period that doesn't trade back all the way through. Okay, so this one traded all the way through, comes out the other side, it's pretty standard. But if you have one that trades out the highs of Asia, pulls back to the midpoint roughly of the Asia session, and then bids out, that move out is going to be a pretty strong move out. Is going to be pretty aggressive, and we're going to probably see an outsized upside move when we see that. This is the last picture I'll throw up, and then we'll look at this on Sierra and talk about directional targets. So this gives birth to it. This is how I organize it on my chart. So this is the afternoon session into the Asia session, into the Euro session, manipulate, into distribution, and distribution actually rolls over and takes all of these old lows, and that kind of gives birth to the next part. But you can see this pattern playing out over and over. The thing I think is cool is when you're not organizing the data this way, you just don't notice it. So I don't really care so much if you're interested in discussing liquidity and where we're going to go grab, or if you're a big fan of any of the people that we're a big fan of, or like any of that stuff. But organizing data in such a way that allows you to notice repetition patterns creates the ability to execute in a way that allows your returns to be outsized for what they are when you're kind of guessing your way around. And so I would say if you have a good way of approaching the markets, then for sure just stick to it, rock it out, maybe incorporate some pieces of this. But I think just like after this many examples, I think you can kind of see it's not only a good theory, it's very executable. So here we'll throw this is a little trade that I took. I don't know if you guys can see this because it is kind of small, but it's about as big as I could make it. I made the video in TikTok, sorry. So this is a lot of lines, but we had the Asia session low down here, right? Now I was late to the entry, so I took a stop, immediately re-entered, okay? And then I'm looking for us to trade through to the Asia session highs, which back in the day when I first was messing with this, that's how I was drawing it out. As soon as we get to the Asia session highs, we can start scaling some of this position off, but we have some other liquidity targets hanging out here. And so the awareness to know when can I hold a runner and have a reasonable goal for it, you can use like ATR, expected moves, a lot of different stuff like that. But structurally, you can also look to specific places. If the buyers or sellers are going to run out of gas or not get over the next hurdle, what would that hurdle be? A lot of you guys trade like gain loss stuff, I would imagine. I would say there's the caveat to some of that would be the simplistic nature of where is liquidity resting from the prior sessions. And so that's what like leads me to lean into a trade, continue to let that trade work, blah blah blah. I think we tagged that 0550, and then that started to make me nervous because the next place that we had liquidity resting was here, and as soon as we pulled off, I think I ended up flattening it up at some point in there. But as soon as we did not have the interest to go sweep that and we started to break small time frame structure, that's the clue for me. Like that was the last leg I wanted to sweep off of that move. But I mean that's just an example of live trading. That was like 4:30 in the morning, by the way. Live trading that idea after we swept the Asia low, looking to rebid the Asia low, retake and trade up through the Asia high, and then see continuation. Um, Again, off of that pattern, accumulate, manipulate, um, distribute, and then continue or reverse. And that's kind of the part you have to ask questions. You have to ask yourself questions about that. Or what's likely? There's still questions you have to ask, but as you get used to seeing it, it'll begin to make a lot of sense. So let's talk now. If you have any more questions or any thoughts, throw them in the chat. But I'm going to talk now about when you have a pattern playing out. A lot of times the market can feel really subjective. Like I feel like this or I feel like that. When you have a pattern that's not just a squinty thing, but is objective, you begin to eliminate like the perspective side of things. You begin to look at it not in black and white, but definitely you can look at the pattern in black and white or the setups in black and white, the potential. And then you begin to ask yourself what areas are possible or probable, right? And so a lot of people are looking to trade from like something that's lost to something that's gained, right? I feel like I do that also. But another thing to put in the hopper, I would say, is your liquidity runs and your liquidity targets. And so the question is, well, what's a target for liquidity? There's two ways to look at it, in my opinion. And I think this is the part that a lot of people have been weak on, that have talked about liquidity in the past, in different, different people that talk about it. So for this, let's just start with this afternoon. So this is a RTH afternoon. That was a continuation afternoon, right? We open the Asia session and automatically we have two liquidity targets, meaning these highs are just internal and inconsequential. This high is internal and inconsequential, generally speaking. There is this up leg auction that failed to make a new high that also gets closed below, and there's some gain loss magic in here. We're not covering any of that. But the high that really matters is this high. No matter what mode of work you're using, this afternoon high is where the liquidity is resting if the market needs that liquidity for exchange. It's not resting here, it's not resting here. It's not resting here. It's at the top of this 6-hour block and at the bottom of this 6-hour block. That's where it's resting. If you drop down, you'll see that this New York PM from a prior day is untested and naked. This New York AM is untested and naked. I hope you guys can somewhat see that. This Asia range and this Euro range are naked. They have not been tested or traded to. So we put in these almost equal lows here. We also have another afternoon session low that wasn't traded through, and another AM session low, New York AM, that wasn't traded to. Okay, so as this trade develops, what I noticed, and I can't remember, I don't remember which day this was. I got to get off that line. That's what I got to do. There we go. But as the day like this develops, and I notice that we we don't take this afternoon high. Okay, we don't trade through it. We stop just an NQ special short of it. Knowing that this is distribution, and knowing that distribution most often will seek to grab liquidity, which way is it going to go is what everybody wants to figure out. And as you look at this picture, you can see all of these lows that we had hanging out, and they're not like 1 hour lows necessarily, although a lot of times they line up like that, but they're lows from a specific time. They're the low of that quarter, the low of the afternoon quarter, the low of the PM quarter or the PM quarter, the low of the AM quarter from prior day, the low of Asia and Europe from prior days. So when we hit a distribution period and we have all of this stacked below, and as soon as we can't do this, right, as soon as we don't take this afternoon high, then what's the next target? If we don't take that high, then we're coming to take the euro low. After we take that, if we're not satisfied, if that doesn't satisfy the demands for exchange, we're going to take the afternoon low. If we don't take that, there's nothing that I would have to lean on until we took some liquidity at the PM here or failed to do so. And failed to do so meaning like that we then set up bullish structure for continuation. Okay? And so then the other interesting thing is we basically closed the AM session on distribution, so down, taking liquidity all the way down. And then what becomes the next big target? Well, all of these highs are internal, and the next big target is 16,100. You've got two highs stacked together right there. Afternoon session reverses, but to some extent doesn't take anything important and now sets up a new framework for us. What's the new framework? New York low, New York high of the afternoon, and then AM and afternoon from the prior day are the key liquidity spots. So what do? We have a muted small Asia internal range. We manipulate the low. We trade through the low of the Asia range. We trade back through Asia. We take the afternoon high. That marks the high of the euro range to this point. And now coming into the New York session at 6 a.m., we're framed up with what? We've got liquidity here, and then a batch of liquidity down here. Take this liquidity, satisfy the demands of the market or no? Well, how would we know? We don't even go up and take the AM liquidity. We come all the way down here and run out of steam just in front of yesterday's afternoon liquidity, and then run right back up and take New York AM and euro. And so then if you're looking at this from a distribution standpoint, yeah, like it's a tough distribution to trade, but where do you get clued in on is when we don't take this. Like as we come down here and we run out of juice, it becomes really clear, because when we want the liquidity, we go get it, obviously. And it's not really a question. Like, it's not like you're squinting at it. And when we don't have the need for that, no matter what's going on, we don't. And that's probably the most subjective part, I would say. But your targets for these trades, it's a lot. You have better targets when you have these ranges stacked like this. It's a little easier because they're closer. When they start getting stretched out, it gets tough. But you think also about the auction that took place here, and the failure to lose these lows is also a thing. And if you're a gain loss guy, or if you just look at the failed auction that brought you to this low, you want to start looking in this area for the possibility of something to hold, which it does. This is the high that brought you to the low right there. Now, the other nuanced thing about this chart is each one of these candles is actually 22 and a half minutes, which is weird, I know. But what that allows me to do is to tell the story internal. Inside of this quarter, I'm able to look at each candle as its own little quarter. Does that make sense? Like it lets me build this little story as this session develops, which also helps with liquidity and targeting, right? So it allows me to take these four and build a story, these four and build a story, these four and build a story, and these four and build a story. And so I'm still looking for some semblance of the same type of patterns, but on a smaller time frame. So if I notice that Asia has developed a accumulation, I'm looking for manipulation during Euro, and then we get like a reversal accumulation, an internal manipulative move, then on this distribution down, I can look for that distribution trade to take this area down here. And that's the way that I would say like banks a lot of times is looking for those type of setups. When you have confluence between the smaller time frame and where liquidity's hanging out and the pattern from session to session. And you can catch the opportunity to during distribution to look for that liquidity run. And again, that liquidity run doesn't have to be external, meaning um, we don't have to take afternoon high for us to have a liquidity run necessarily, because this move up right here took all these swing highs down through here. So like there was obviously people had trailed stops, right? Down into this area, and then this move up was a liquidity run, but it it was internal to the upside, meaning it didn't clear the high of this session. And we actually still, last time I looked, hadn't cleared the 16,100 yet, which I think they're probably holding that out for like a party tomorrow or something. So the idea is that you want to be looking for a certain pattern contextualized inside of time, inside of 6 hours, compare it to the next 6 hours. Inside of that, you can get as granular as you want with the idea. But it's a way to take the subjective nature of the markets and make it much more objective, especially when you begin to apply rules like how do you define accumulation? And banks and me and probably 20 other people could define it differently. But as long as you have it defined for yourself, then it becomes systematic. The other interesting thing that I noticed is that these swings almost all like your very easily identifiable swing low or swing high almost always come like in the edges of these time periods, partly because I'm drawing them up and keeping up with them, but it's just quite interesting. Like we could have made this high whenever, but we made this high here and then it seemed to matter. Does that make sense? And I know this is one example, but when you see this over and over and over, you begin to think like, man, that's crazy that somebody somewhere or some computer that's throwing orders or hedging options flows or whatever is happening tends to bend the angles of the market in those areas or offload or onload positions in those edges of those areas um, of that time. I think that's the kind of interesting, cool thing. So when over here, like in our room in Vanta, when we're coming into the day, like today, the thing that stood out as peculiar to us was that we didn't take this New York low as we had news happen, and in fact that we didn't take the New York low at the open either. New York low being this 6 o'clock spot. Now you could have had other things cluing you into the long side trade, but for us wanting to try to be on the long side, now they didn't make it easy to get position for, and entry nuance and mechanics is a conversation for another day. But we were looking for the opportunity to be long, um, to trade through at least. Well, I mean, I guess we opened above the afternoon. So then the target up for us was 16,037. We talked about that a bunch. I closed the trade in the 90s, didn't hold it to 37. Also, yesterday, I did the same thing, closed the trade like right here before we broke down. The target for me on that trade was to trade through 2750. And I did the thing that we shouldn't do, and I was like, good enough, I'm out. When we had this clear target here that was super reasonable from the prior afternoon, ended up being the thing that kind of stalled this whole move off. Once we picked up that liquidity, we kind of chilled out. So we will, like every day, look at liquidity. Where are our quarterly highs and lows? Because that's what we would consider true liquidity. Truly, there's business to be done there. And then we would try to evaluate how we interacted with liquidity leading up to that moment in time and what pattern had unfolded. And what had unfolded here was accumulation, manipulation, and this is actually interesting. Remember, I said that when you see, so you have your Asia range, when your Euro session trades through the low, Banks and I were actually on the phone, and I was like, "Yo, we should get long back through the Asia range tonight and try to hold it through." And he was like, "Yeah, maybe." And I was like, "I don't know. I'm just gonna go to bed." Well, I think he actually took the trade after we got off the phone, which I hate him for. But when you see us
I did.
trade through that low, we trade through this high. This move back down kind of stalls out around the midpoint. It also stalls out at a failed auction lower here, a very small time frame. That leads to outsized upside moves, which is what we saw, actually what we saw today. Although albeit grindy and news driven, um, and we got rollover stuff starting to sneak in. But when we have that kind of setup, that we talked about that outsized upside move comes from that failed auction back through after you see manipulation. Okay.
Yeah, and actually, I posted a 1 minute chart of the AM session in chat. So basically, that is going into the AM session. We knew that that was going to be a distribution, quarter, of the 6 hour quarter. Now the key into that 1 minute, and the reason why I'm showing it to you is just to acknowledge that this quarter one, this first 90-minute cycle of this quarter shows just as accumulation. So then when you get into the nuance of it, of the manipulation, we tried to push the low one, two, and then finally in that third quarter of in that red box, we tried to push it on the actual distribution move to the downside. That is basically where we held, and then you see this continuation move going into the open, and then uh basically the green box, you can kind of walk through these in stages, but the first quarter of that first 22-minute cycle is the accumulation, and then you have the manipulation, the distribution into basically a failed auction low. Um, and I guess that 80 mark or 87 mark that
Yeah.
we were talking about on chat today.
Yeah.
And then from there, it's the reversal of the distribution back up to the upside.
Yeah. Looking to
So
run these stops out.
yep, yep.
Now, trying to get positioned. Now, I'm not. I mean, neither of us, nor is anybody saying that. Like getting positioned here is easy. Like the price action in that area today was a little bit difficult. We can all acknowledge that. I took a couple stops in there, not gonna lie, but still continued to fish for the long. The easier long came a little bit higher. This was just tough, but having the awareness of what had unfolded and what was unfolding can keep you on the right side of the market. Now, I still screw it up. I mean, I've still had days where I'm, you know, where we're not synced up with what's unfolding, but fewer and further in between, and more often than not, it's user error more so than it is like all the context clues are there and we just miss it, or I just miss it, or whatever. Um, so that's kind of the thing. Like if I were to summarize tonight, I would say the following: take a box and draw it on your chart, and organize your chart, some random chart, into 6 hour chunks, starting at Asia open. So 6 to 12, 12 to 6, 6 to 12, 12 to 6, or 12 to close. Mark the highs and lows of those boxes. And if you want to get real funky fresh with it, take a chart that's normally a 30-minute chart and make it 22 and a half minutes. Okay. And then you get the picture of what's displayed here, as well as you get the opportunity to play around with these liquidity spots. And again, I think the thing that's unique or nuanced about what we're doing here is there's about 4 other pieces to the puzzle that we're also applying. For instance, like familiarity with gain loss breeds the opportunity to look at certain highs as protected versus unprotected. So um, this wherever that 16 one, like that failed to gain here that played out, right? Like being aware of the structure from a gaining and losing support perspective is one thing that's a little more nuanced that we're doing than anyone we've seen with regard to this information. And then also the targeting of quarterly highs and lows as liquidity opportunities, as targets, right? Or as areas that will inform you of intention. Because what's interesting, like I said, is when this kind of thing happens down here, this can be very informative for the rest of your day. It's 10:30 in the morning, and we just smacked sellers into a 30-minute hold zone. Actually, it might have been even gained, but at least a 30-minute hold spot. Okay, so we either had failed to lose here, or we just traded into a hold spot. Well, at that point, we know we have this swing low, but this swing low matters because of when it came in. As soon as we don't take that, the opportunity is back to the upside. For what target? For the New York AM Open 76 and the Asia High 16,000. Now there's internal stuff inside of here, but that's the two main targets. And then your third target would be internal highs here, structure. And then with the changing of this into the last quarter of the day, you got to get real careful. Um, you guys have probably seen this before, right? The 12 o'clock to the afternoon, like the change of pace, or at least from 12 to 1:30. That first hour, that hour and a half over lunch, a lot of times we will flip around and run liquidity. Okay, so just again, having the awareness of that, keeping up with that, and being prepared for that. And if we turn around during lunchtime and run liquidity, where might we run it to during the afternoon, right? Is another question to ask. And if we run liquidity during lunchtime, does it accomplish anything? As far as I'm concerned, we could have traded all the way down into here, but if we didn't take these lows, then that move was in danger, right? And the reason those lows matter is a couple reasons they matter, but the simplest and easiest to see in accordance with the conversation we're having is this lack of taking the euro low when New York had the opportunity this morning, or that morning, whatever morning that was. So those things can be guides as targets as you're doing that. Last piece. We're right at the hour mark, and then we'll kick around stuff, poke holes, argue, all that good stuff. So again, your parameters for what accumulation is will define for you how to view a Monday. But then, in light of that, if Monday meets those parameters, then the anticipation of certain days of the week carrying with them a higher potential to make the high because of the patterns that we see play out. Imagine if these were days of the week, right? If this was Monday, and this was Tuesday, and this was Wednesday, and this was Thursday, and then let's go over here and say that like this this between this yellow and red line, let's say this was Monday, this was Tuesday, this was Wednesday, this was Thursday. We would have an expectation, right? As soon as Monday closed and it continued to trade higher, we would expect continuation, we would expect accumulation, we would expect Monday to Wednesday to manipulate. Well, what would that mean? That would mean trading through the lows and the highs, and then our decision point. Can during manipulation can we get back through the midpoint? If we do, then we seek liquidity lower. which is what we see through quote unquote Thursday. I just don't have a daily chart queued up for that, but that's why when you looking at Monday's activity and what percentage of Mondays behave a certain way, it can set you up to have anticipated opportunities later in the week. It can also set up your trading perspective. Like if Monday continues to trend, which it does more often than not, then Tuesday we wouldn't necessarily be looking without a news catalyst for some outsized big move, right? And about 60 something percent of the time, 60-70% of the time, again depending on the numbers, 46.5, so 77% of the time, 78% of the time, or 70% of the time, depending on the way you look at Mondays and the data set. Monday continues, or reverses, right? It goes higher and continues, or goes lower and continues. Well, in that case, then then Tuesdays become a day for potential rotational trading. And then Wednesdays really become your opportunity day when you see a manipulative move. And we get a lot, we obviously get news on Wednesdays, FOMCs on Wednesdays. Hilarious. So you look for Wednesdays to trade kind of that outsized move. And then if Wednesday doesn't get back through the midpoint of Tuesday, all things being equal, you're looking to then see a real outsized upside move into Thursday. What's funny is with the skewness of the market being to the upside, generally speaking, Thursdays are a pretty hot day for making the high of the week, because a lot of times, if this were a daily chart, a lot of times Wednesdays don't give up that midpoint, and you see that continuation through Thursday. And Thursday is, other than, we don't count Friday because it's a fifth day and we're only talking about 4 quarters: Monday, Tuesday, Wednesday, Thursday. If you take Fridays out of the equation, I think Thursdays make the high of the week more often than any other day, which would be an affirming thing if you were leaning into this type of pattern and structure, right? Tuesday could be muted most likely, and that Wednesday would be your real good opportunities day, which means on directional trade setups, Wednesday of that week would be the day to lean into those. Look for an OR trade that doesn't fail, or look for the OR trade and be mindful that if it fails, it should go pretty strongly directional to the other side, that kind of stuff. All the setups and all the things that a lot of us have learned from different people, any of you guys that are in here that have been in Flairy's room, a lot of those type of setups, there's other ways other than this to nuance when to really lean into them, but this would be another thing to put in your hopper. So if you have a delta continuation setup going into a Wednesday where the week has had a directional Monday and a muted Tuesday, then that one is probably one of the ones that's going to work out. At least has a higher probability. Whereas if you have a delta continuation day after a strong continuation Monday into a Tuesday, when we would be anticipating a muted range, all things being equal, maybe lean in less to those setups. And that'd be work that you guys could run on your end, or with whoever. So that's kind of it, man. That's a lot. 6 minutes over. We don't have to leave. You don't have to go home. You can stay here. But that's the presentation, is the opportunity to organize the chart into 6-hour chunks, create a rhythmic approach to how the market moves, a nuanced approach to what are you looking for in each quarter and how does it inform the next. And then from there, you start to lean into setups that lean into the strength of the day type that's developing, right? And so we think that can be helpful.